Are you curious about the recent decline in Tesla's stock? In this video, we explore the reasons behind the $200 billion loss suffered by the company in 2021. From production problems in China to increasing competition in the EV market and an outdated portfolio of vehicles, we examine all the factors that may have contributed to the decline. We also examine the role of Musk's investments in other ventures such as Twitter and their impact on the company. This video is a must-watch for understanding the current challenges facing Tesla and its future prospects. Get ready to dive deep into the complexities behind one of the most innovative and disruptive companies of our time. Elon Musk, CEO of Tesla, lost $200 billion in 2021 due to the decline in Tesla stock, which accounted for the majority of his net worth. His net worth is closely tied to Tesla's stock performance, as he has obtained funds for other investments, such as Twitter, by selling Tesla stock. However, in 2022, Tesla's stock lost 65% of its value, amounting to over $700 billion, which was worse than the major stock market indices' performance that year. The main reason for Tesla's decline was a drop in demand in China caused by production problems and COVID-related lockdowns. The article suggests that the long-term prospects for Tesla are uncertain, and it's difficult to say how much of the drop is due to gravity acting on an overvalued stock. While some may attribute the decline to Musk's handling of his small but highly visible investment in Twitter, it is important to note that the Twitter distraction may have been a minor part of the story. Was Tesla hit more by China's COVID predicament than other US tech companies or automakers? It's difficult to say whether Tesla was hit more by China's COVID predicament than other US tech companies or automakers. China is the world's largest car market, and whatever happens in that market now affects the rest of the world. All of the automobile manufacturers are betting their future on China and have had supply chain challenges and manufacturing shutdowns. Elon Musk has portrayed Tesla's difficulties as a result of structural, macroeconomic issues over which he has no influence. However, it's important to note that the entire car business is apprehensive about 2023, and almost all of them suffered with production, battled to get automobiles to people, and costs began to climb. Another challenge for Tesla is that every other automaker is getting heavily involved in the EV arms race. They're following the strategy that Tesla has adopted for years, which makes it more difficult for Tesla to maintain their market position. An issue that has not received enough attention is that Tesla's portfolio of vehicles is outdated. The models, Model X, Model 3, and Model I have been in production for 10, 8, 6, and 5 years respectively. This is a long time for a car to stay in production without being replaced or significantly modified, especially when American consumers tend to prefer the latest and greatest cars. The fear of stagnation may be a contributing factor to the decline in Tesla's stock. Additionally, other automakers are now releasing new electric vehicles, which may make it more difficult for Tesla to maintain their market position. The writer suggests that Tesla's CEO should focus on the core business and source of his fortune instead of being distracted by Twitter. If you're searching for my key reason for the stock's decline, it's all about China. The economy is in flux, and Twitter shenanigans most likely in that order. The main issue, whether it's about the stock price or Tesla's long-term capacity to compete in the marketplace, is that everyone is now showing up to the game dressed the same way. I assume you can use whatever metaphor you like. Everyone is now wearing the same outfit to the party. Tesla's conventional reputation has been that it is the automobile to acquire if you want to show how environmentally conscious you are, and that the firm is cool and respectable. Is that an accurate characterization, and if so, has Elon's increasing polarization exacerbated it? You're wondering about the Twitter saga. What effect has it had on the core Tesla buyer, as we all know? It's difficult to say how many buyers have been turned off by the brand as a result of Twitter distractions and the direction Musk's policies have taken. While some people may be bothered by Musk's tweets, there may be just as many who don't care and are only interested in the product. Twitter does not have a large user base, but it has a significant impact on our dialogue. While some may find Musk's behavior unprofessional, it's important to note that other automakers' CEOs are not as active on social media, likely because they see it as a liability for their business. In the end, it's hard to say for sure what impact Musk's presence on Twitter has had on Tesla's buyer base, but it's clear that it has played a role in shaping public perception of the company. Unfortunately, yes, Elon has stated that Twitter will benefit Tesla stockholders. That has not happened. But do you think that his possessing this big communication platform may be a net plus for Tesla instead of what it appears to be now? My personal belief is that his purchase of Twitter had a significant impact on Tesla. Twitter has been the most important tool for promoting Tesla and making product announcements about the automaker. That platform was critical to his ability to do so. He no longer has a public relations team, a marketing team, and they no longer advertise. As a result, he will reveal items, updates, and things on Twitter, often in people's reply tweets, which causes the market to spike. Or it changes the markets because Elon tweeted about a fresh development. So if him owning this platform that's been critical to his company's success, I believe that had to factor in a little bit. There have been charges, notably from investors and bulls, that he is distracted these days, that Twitter is his new toy, that he is losing interest in Tesla, and that he spends his day responding to people and making memes. Well, you're a very busy CEO. It's like, how are you going about it? I believe is a reasonable question to pose. But in the long run, can Twitter be a net positive for Tesla? I'd say a lot of things have to happen for that to happen. He hopes to break even with Twitter before the end of the year. He's mentioned doing this sort of catch-all app ecosystem on Twitter, payments, blah, blah, blah. But that's a long way off. That is merely a list of things he wants to do, not a realistic plan. So if this ever becomes a massive net positive, whether from a software standpoint or simply from a communication standpoint for Tesla, I believe it will be a couple years down the line, if at all. To whatever extent the Twitter situation is a concern, he has some influence over it, even if some damage has already been done since people dislike him personally. He may change his behavior or public statements, or he could sell the company and lose money. But in terms of the other issues, demand in China and abroad, supply chains, and more competition in the EV market, is there anything he might do to enhance Tesla's position? This is merely my opinion and or analysis, but returning to the challenge of having an older lineup of automobiles competing against a slew of new competitors. One thing I believe will significantly move the conversation in his favor is if, at the next quarterly special event, he says, yeah, we have 3 new Teslas and 4 new Teslas on the way. There will be 2. Or 3 new crossovers, a new sedan, and something else. Show that there's more in the pipeline than just the Cybertruck, possibly by the end of the year, including a supposed but unconfirmed Model 3 update. Automobile manufacturers do this all the time. Here's a sneak peek at what our lineup will look like in the next 5 years, they say. If he did something like that and Tesla said, we're confident in our capacity to deliver, I believe they would silence many detractors. But that is not what we are witnessing. Another thing I was going to say is that it's akin to comparing Tesla to Apple. I feel that one of the main reasons this stock was so expensive for so long was because so many people truly believed Tesla had the ability to become the Apple of automobiles. That is a force so disruptive that it controls 50 to 60% of the market and the rest is distributed among a few smaller companies. Much as our phone market is 50 to 60% iPhone and the remainder is Android made by a few other businesses. I believe they anticipated this, and I do not believe that is a realistic view of the future. I believe Tesla has the potential to become a major EV player if it continues to make sound product decisions. It will compete against a slew of established brands that get EVs right. Many legacy brands that do not do this right will likely fade out. However, viewing it as, oh, this is going to be the car company one day, I believe it is excessively optimistic and contradictory even how different the auto sector is from creating phones. In conclusion, the decline in Tesla's stock is a multifaceted issue that requires further examination. We hope this script has provided valuable insight into the challenges facing Tesla and the reasons behind the recent decline in stock value. Don't forget to like and subscribe for more informative content on the latest business and technology trends.